So, welcome to another episode of the Market Makers in Middle East and Africa podcast. I'm your host, Abrar Hussain. Today, I speak to Gaurav Dhar, CEO at Marshal and board member at MENA FinTech Association. Gaurav, welcome to the podcast.
Thank you so much for having me.
Gaurav, a VC and a second generation entrepreneur, a CEO at Marshal. Tell us about your story.
Well, where does one start? I mean, the beginning is always a good place, but I'll try and keep it brief as much as possible. It might get a bit too long, but essentially, my family's been here in the UAE since the beginning, since literally when it was still known as the Trucial States of Oman. My father had started a payment technology company close to 4 decades ago. So we're one of the first, if not the first, payment technology companies that became, I guess, as we all know it as fintech today. And I've been part of that journey for 20 years myself. It's been 2 decades in September, albeit 19 years at the family business, which we sold to a sovereign wealth fund 3.5 years ago. So I engineered the exit to the sovereign wealth fund. So as part of the business, it was learning the payments ecosystem. It was transforming a company into a more corporate standing, that was acceptable for PE and funds and sovereign funds to participate in the next chapter of the business, the phase that we entered in. And so I'm currently the custodian of the business with my partners, Gulf Finance House, GFH, in Bahrain, who I must say have been an absolute pleasure to work with. So that's one of the many hats I wear in the ecosystem on a daily basis. Yeah.
Oh, perfect. Thank you. What attracted you to invest in fintechs and build the ecosystem in the MENA region?
I think I'm privileged to be one of the many people help building the ecosystem in different ways. One is with time, and one is obviously with a lot of capital. I'm very heavily and personally invested in the ecosystem, not only here in MENA, but also globally, actually, with hundreds of investments, with all my own capital, like I said, not a fund. But when you look at that perspective, I do it from a position of privilege because whenever I've looked at my career, the fundamental is I've always looked up to people who have helped out of benevolence or experience. And allow me to elaborate on that a little bit more. I think the people who are in a position of privilege or experience are obligated to return. I think it is necessary for all of us to grow together. You can't grow alone. And for me, when I reached a point in my career where I was capable of perhaps giving back experience and knowledge to people who were just starting their careers in the ecosystem or starting their journey, I felt obligated and privileged to step in, to participate where I could add value. In some places that's time, some places that's money, some places it's both. Some places it's a mixture of things of how I am able to assist those people in their journeys, not only those people, but those companies. And it's a fantastic journey to be on where you can contribute and see something outside of yourself grow into the ecosystem. So the MENA FinTech Association is one way where I spend a lot of time. My investments, my board positions, and then, working closely with people like Hult University, working very closely with entities in Abu Dhabi like Hub 71 or, the Museum of the Future in Dubai or Dubai Future Foundation or Futures Accelerator. So it's fantastic. You learn so much as well. You get back too, you get a lot back. I'm learning so much in the process as well. So there's a beautiful duality to this contribution and learning. It's a two-way street. So I always wished also in my journey as an entrepreneur, because that's what the family business is. It's an evolving entrepreneurship journey. I always wished that somebody from a position could also contribute to my learning or experience or growth. And so from that need or want, I feel that now where I am, I should be that person contributing or delivering that need or want or gap where people see that value.
Perfect.
Yeah.
How do you see the MENA region from fintech perspective, the current trends, or where do you see the opportunities?
That's a very big question, because if you look at fintech as a sector, oh my God, there are so many components that make up fintech. We see acquiring or payments on one side, whether it's e-commerce or physical payments. We see issuing on the card side, whether it's digital or physical again. And then those are just two small parts of it. There's regulatory technology, there's lending technology, there's savings technology, there's trading technology, there's B2B, B2C segments, B2G segments. It's a vast space because money and fintech touches every aspect of everything we do in our lives. And because of the way technology is being adopted by consumers and businesses and governments alike, fintech will play a part, or this is where you get the debate, are you tech fin or fintech? Are you a technology company that provides financial services, or are you a financial services company that provides technology solutions? The space is very, very dynamic, hyper evolving, but opportunities are tough because looking at the MENA region, we've never really had disruptive financial technology adopted en masse. It's been brought to us. Apple Pay has been brought to us. We've had smaller, not global initiatives, which, we have been adopting in our own way. The Knoll transportation card in the UAE is an excellent example of how we have taken an idea and adopted it for ourselves, and it's worked extremely well. STC Pay has taken a line or a WhatsApp Pay or a WeChat Pay and adopted it for itself.
Where do you see the scale in these countries, or it has to be fragmented, or there can be a success story which can start, let's say, in KSA or UAE or Egypt and scale across the Middle East?
It's a very good question. I think just looking at the statistics, the first thing is data has actually been very unavailable. It's been a big problem for the payments or fintech ecosystem at all. Getting data on the number of users, the number of transactions, the number of systems, the number of adopters, timelines, it's been very, very, very sparse. I mean, it's very tough to get that data. Whereas if you look at data elsewhere in mature ecosystems, right, or older ecosystems, let's not say mature, let's say older ecosystems, data is more readily available for people to make decisions on where to disrupt or what to do. I think we're getting better at that, and focusing a bit more on your question in relation to what I've just talked about from a data point of view. If we look at the data, there's still a tremendous amount of business and opportunity for technology to play a part in the basics of what the fintech ecosystem is. I'm talking about payment technology. I'm talking about card issuing. I'm talking about business lending, trade finance. These are things where technology has a huge role to play for the long term and in the short term for disruptive venture capital backed technologies to come into play. Not just in Egypt, UAE, and the kingdom, but the whole region. But stitching them together is still very tough. Mm-hmm. Regulation, issuing of licenses, it's still not universal. Our taxation policies are not universal. Our VAT is not universal. Our cross-border acceptance for transactions is not universal yet. I mean, it's the plumbing is there, but it could be faster. It could be better, And this is where I think the idea of a GCC platform is something that the ecosystems need to really address.
Any success stories from your investments which you made and exited, or even helped them grow?
Wow. Okay. So there's a few investments in the portfolio. So I'll have to think about it. I mean, I mean, one success story. I'm not usually very public about my investments, I have to say. So perhaps I'll try not to name those companies.
Sure.
Let's just say there's been a successful BNPL company. I've been very privileged to be a part of in some very small fashion. So I've been lucky and privileged to, in the early days, perhaps be part of very small parts of the conversation. No, by no means a large contribution. I can't say that. The founder is extremely astute. So I'm proud of that journey in the BNPL segment, literally one of the starting ones. And there are certain companies in Latin America, for example, I'm very proud to be a part of that very quickly scaled globally within 2 years. And I've been part of those conversations right from the get-go, again, in terms of talking to the founders and how they shape their approach to a global market in small contributions. But those companies are worth multiple figures, right? But closer to home, I think one of the most proud achievements I have from a personal contribution is working with government. There was an instance where there's a government institution here, federal, which required digitization in a fintech manner for collaboration. And in a very friendly manner, I was able to assist them in identifying the landscape of partners and people who would potentially be the right collaborators for them to assess themselves and work with. And that project, the speed at which that project went out, grew, and helped businesses here grow, it was an amazing coming together of the UAE federal system with new CEOs who were forward-thinking, and startups which didn't exist before, who were also open-minded and collaborative to work with the government here and federal institution. In 3 months, 3 months from the first conversation to going live and being able to open up bank accounts for SMEs. That was wonderful to see.
As an investor, when you invest in new ventures, how do you evaluate them, and what things you look for before making a decision?
I think investors, apart from myself, need to understand their own risk profile. Whether I'm investing $10,000 or whether I'm investing $1 million, the question is about your risk appetite to deploy that capital. Because that also reflects the stage of investment of a company. If I deploy $1 million into Klarna, for example, before they IPO, it's a different risk profile for my capital than if I'm investing $1 million check into a company that's just an idea on a piece of paper, right? What validates that investment? What validates my conviction? What is my appetite? So the first thing an investor, even myself, has to ask, what is my risk profile and appetite for that idea, for that business, for what they're doing, what stage of business they're at, and also how much I'm willing to admit that I know about that business or that field, or I don't.
Do you see many unicorns in fintech specifically coming out of MENA region in next 5 to 10 years? I mean, it's a long horizon, but
no, it's absolutely, there are going to be a number of unicorns. But again, I think aiming for a unicorn status is a good aspiration to have, but I don't believe it's the be-all and end-all for setting the benchmark for success as in terms of what you produce in terms of exits in this region. I think companies with $100 million exit or $500 million exit should be just as proud. Mm-hmm. I would love to see, let's say 20 to 30 unicorns in the next 5 to 10 years. I would love to see that, right? But I would love to see 50 to 100 companies in the $500 million range. And I'd love to see 200 companies in the $50 to $100 million range. Now, will that happen? I don't know. I wish I had the crystal ball and a lot more money to spend. I would be on my way even more. But I think businesses growing on foundational notional, returning money to investors, whether it's 1x, 5x, or 10x, as opposed to just trying to hit this billion-dollar unicorn status. I just want to see good exits, good returns, because you know what happens after then? It doesn't matter if it's a billion or not. That money comes back into the ecosystem. Those founders, after they've cleared those companies to professionals or management, or they become part of much larger organizations like a Visa or a MasterCard or a Stripe or an Adyen. Adyen doesn't require. But, these people then start their next journeys because they had the experience, and more capital follows. And people are willing to work with these new leaders in disruptive areas. And that's the result I want to see. So whether it's a unicorn or whether it's $100 million exit, successful, profitable, I'm not really that pushed. I just want to see the volume happen. I want to see that recurrence and resurgence of talent and capital re-implemented in this ecosystem. Because then, you know what? Then if you ask me again 5 to 10 years later, how many unicorns you'll see? I can actually say it's going to be even more. Oh yeah, even more, because it's a snowball effect. It'll keep growing. Talent will grow. More people from outside the ecosystem will want to be here, because look what happened with everything that's happening in the metaverse, or in the world of crypto or in blockchain.
Any specific sector in fintech or technology which will have a major impact in the MENA region? I mean, look, BNPL happened, but anything else where you see that, look, there is a significant potential or there are a lot of scope to disrupt in MENA region?
It's a good question. Okay, so I think if you look at BNPL as an example in isolation, BNPL in some shape or form already existed in this market. But what happened was the businesses that adopted BNPL went deep into BNPL. They went deep into what is the problem that the current market or solution providers are not addressing. How can I compound this with technology to scale it into a multi-country offering? And how can I address the problems of the players in the ecosystem that use this technology having more value-added benefit by participating in the use of my provision of BNPL? And that's what BNPL did. If you really dig into BNPL and break it down on the consumer journey, on the business journey, on the technology journey, you will find it actually did a number of things better, faster, that the players offering a version of BNPL were unable to actually do previously, because infrastructure, technology, and capability was not at its peak availability for people to consume and dispense that technology. So BNPL in isolation is a very good use case of someone seeing a financial product, understanding the capability it had to be enhanced using technology today in the new world we live in, and they went for it. And they went into it completely as a single product, fully on. So that is BNPL in isolation.
Now, coming to your board member roles and, sharing that experience from your side, how companies, mainly new ventures, can form an effective board? I mean, it's very different for new ventures, different for established companies, but specific to new ventures, how they can form an effective board which is helpful for them and help them drive growth, and at the same time have a proper governance?
Listen, I think people think that being on a board is a very glamorous exercise. It's not. It's a lot of work. It's a very, very, very highly responsible role. And it's a very, very serious tag for you and the company. Being on a board doesn't mean you're a movie star, or doesn't mean that, you're automatically upgraded to some sort of status of any sort whatsoever. I believe very strongly that when you have a board role, there's a dual responsibility for the board member to perform their absolute role to the company, and for the company to ensure that they're selecting the right board members. So, in effect, about what you're talking about, how can people select the right board? I think the first thing people need to do is understand where their strengths and weaknesses are. A board is meant to fill in blind spots, like I've talked about earlier, or perhaps allow you to navigate or shed light on areas and aspects of business and technology that they're not armed with. And different board members in different board roles have different capacities. They could be figureheads, in which case it is just dressing it up because those people, the company is being run so effectively that perhaps board members are just there as a token advisory. Once a quarter, they participate, they contribute their advice, end of board role. Some other board roles are a lot more frequent. A board role is a board and advisor role, right? Where you participate in a lot of activities and phone calls and work outside of the boardroom, right? And what is the boardroom today? It's not a glamorous exercise. It's a Zoom call. It's time, right? It's valuable time for the board member. It's valuable time for the company. So board roles have different layers of their involvement and capacity. My belief is, apart from what board roles should be identified for, not only for the board member, but for the company, I believe board roles should evolve. I believe board roles should rotate. I think the moment a board member serves out their time and use for that company, they should be dignified enough to resign from that role or step down, because they are then being selfish. And if they also identify that their usefulness has come to an end, right, then they should inform the company and board to replace them with somebody that's perhaps better in the next cycle of the journey, because startups are constantly evolving.
Now, we see in the NE ecosystem and in UAE as well, we have a lot of talent in established companies, which are bigger companies. And then you have startups where we have people passionate with good ideas and all who wants to scale. How these people who are in established industries with a lot of experience can contribute to the new ventures? Do you think in practical, let's say for example, somebody who a lot of accounting experience or finance experience, or someone with a lot of sales or business development experience can help these companies? Is it like advisor or advisor to the board? So in what capacity they can work and what is practical?
So that's a fantastic question. The short answer is absolutely. How can people with experience contribute to startups' journeys? They can participate in incubators, accelerators, angel investment forums. You can take part in groups like TIE, for example, where you can disclose your expertise. And then we have startup programs for women founders, for student founders, for university challenges. So there's so many programs out there where they require help from what we call mentors or catalysts to contribute their expertise to these companies. Now, two things are very important. One is time and the other one is money. Certain people genuinely have the capacity to give their time. I would urge those people to be the first people to step up and participate. There are people who don't have time because they have a contractual or fiduciary duty or a family obligation where their time is distributed elsewhere, or they are fixed for that time. If the startup requires their expertise and they have the capacity to reward those people, whether it's monetarily or through vested equity or however they agree with the mentors or with the advisors, then those people would, as a second layer, engage with those companies at different levels who can afford to exchange in some format value for time and expertise for these people. So those people are also readily accessible. I think the ecosystem is so well established that I don't think there's any shortage of events or programs for people to participate in. There's Techstars, there's Startup Bootcamp, there's Plug and Play, there's Hub 71, there's Shera, there's Dubai Futures Accelerators, there's the Youth Foundation, there's, Studio Ventures, there's DIFC programs, there's ADGM programs. I could go on. Mohammed bin Rashid Foundation. There's, I could go on and on and on and on about the number of programs where people can participate or see what's happening in the ecosystem to contribute. So I would encourage people to participate. Go to these events. Go to see what's happening in the ecosystem. See what excites you. Give your time. Invest if you want to. Strike deals if you need to have compensation for what you're doing, and these companies are mature enough to value your time that way. Mm-hmm. So yeah, there's a number of ways.
Fantastic, advice. My last question, Gaurav.
Please.
What drives you? Investments, managing your own company, sitting at the boards. So what is that keeps you going?
I guess it starts with me being in the UAE and my being third generation. My grandfather first came here. I consider myself an honorary Emirati. Right? I'm 41 years old. I've been here all my life. I've studied abroad. My business has been here. My investments, a lot of investments are here. Millions of dollars, and we contribute to the ecosystem everywhere we can. Right? And I want to see my home successful. This is my home. Whether it's technology, whether it's business, whether it's government, right? Whether I can do it for free, whether I get paid with time, and whether I can invest and make money, I genuinely want to see my home successful. I want to see my home grow. And I realize that I, as an individual, can only do so much. But if I can contribute and participate outside of my current journey as CEO of Marshal FinTech Partners, where I spend most of my time, if I can participate in the ecosystem by giving time and money in whatever capacity is available to me, I can help those other journeys grow.
Gaurav, thank you very much. It's a pleasure to have a discussion with you, and thank you for coming. It's really very interesting discussion.
Thank you so much for having me. It's been a pleasure to be here.
Thank you.